Okay, testing, 1, 2, 3. Testing, 1, 2, 3. The rain in Spain falls mainly on the plains. Morning, sorry I'm a couple minutes late. It's, I gotta go over there. My mouse ain't working here. What is it? Tuesday? It's only Tuesday, oh my gosh. Tuesday, September 18th. Holy smokes. 7:34 in the morning. Holy smokes, I'm tired. Look at that. Oh. It's that time of year, man. Currency traders don't get a lot of sleep. I am exhausted. I'm totally shot, man. Holy. So anyways, I want to do the webinar and then take a nap and then get back to it. But anyways, holy smokes, Tuesday. Well, anyways, that's the life of a currency trader, I suppose. Without further ado, welcome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good to see you. My name is Wayne. I am not kidding. Can you see that? Like, my eyes are all puffy. I have tears coming down my eyes. Holy moly. Anyways, hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way. Oh, hungry. I've been trading currencies a long time. I love it. I love trading in general. It's an amazing business. No accounts receivable, no accounts payable, instant gratification, low setup, startup costs. Love it. Technical and fundamental analysis. Those are the big things you have to learn. A lot of traders out there, they don't know anything about fundamentals, so they just focus purely on technicals and they get very, very mechanical. I suppose that's fine. A lot of newer traders are short-term only, like they're trying to make a lot of money in the next 20 minutes. Okay, well, that's a strategy as well. I tend to look at long-term fundamentals, long-term technicals, put together, like a day trade is something that lasts the New York Open, and then a weekly swing trade lasts, 3 days. And a monthly swing probably lasts 3 weeks, but it could be 3 months, depending on the time of year and seasonality. So those are the things I try to teach you every single day during these webinars, how to analyze the charts, how to set up a trade plan. And like I've always said, if you're not spending the majority of your time waiting for your setup, waiting for price to come down into your trade plan, then you're probably doing something wrong. If you find yourself chasing instead of waiting, you got everything backwards. So anyways, the overriding goal of these webinars is to teach you how to put together conservative, disciplined, and ideally repeatable trade plans. So please ask questions, get involved. If you're watching this live, hey, a like would be really good. If you're watching a recording of this, you know what you should do? First of all, leave a comment. Second of all, make sure you subscribe to the Forex.Today YouTube channel. The reason for that is you get invited to these live events where you can ask questions while I'm doing the event. So make sure you do that. So anyways, I am the Chief FX Market Strategist. You're watching this live. Whoa. Chief FX Market Strategist for Traders Way. So if you're benefiting from these daily webinars that I've been doing over and over again for years and years and years, if these are benefiting you, would you show some loyalty and respect and visit tradersway.com and open an account? Give us an opportunity to earn your business as well. That'd be greatly appreciated. Yeah, so good day. Good day, everyone. Boom. So let's get going. I hope you don't mind. You probably don't want to watch me eat, so let's go here. Let's get going. Happy Tuesday, like I said. All right. Let's take a look. I hope you remember all these charts. Remember how we had this coming down, and then we had it coming up, and it did go down, it did go up, came down. Didn't quite double bottom like we hoped. It's all right. Did go up though. See, I was hoping for a double bottom at support. In this case, it just kind of did the swing. Remember, this is a perfect swing. Beautiful. That's exact bottom. That's exact top. Great. Beautiful swing. In this case, on Thursday, we had it coming down for a Monday swing, right? Again, this was Thursday's trade plan, that it would fall, not because it's bearish, but because bulls were taking profit. And then whoever made these pips are going to want to do it again. So sure enough, they've done this. So remember, this down and this up, we did on Thursday. It's Tuesday. So now, and of course, look, you'll say, wait, no, it wasn't perfect. I know it wasn't perfect. Why did we find a challenge here? Because that's exactly where a bear would sell. That's exactly where a bear would sell. That's exactly based on price action, based on pivot points, basic swings. So whoever did this, we're talking about that's 1, 2, 3, 4, 5, 6, 7, 8, 9. For 9 hours, they were making money. For 9 hours, they were making money. And then where did it go back up? Well, yeah, that exact original price area that we identified before. So this tells me bears are doing exactly what bears are supposed to do. Bulls are doing exactly what they're supposed to do. And generally, the prevailing trend typically wins. Not always, of course. And, well, we're working our way up to this target. Cool. You have to ask yourself, too, now that we're above this area, and that seems to be a confirmed break, is the market a little bit less bearish? I wouldn't call it bullish, but is it less bearish now? Maybe on this 1 hour chart. How about a 4 hour chart? Well, a 4 hour chart looks like we're just going back into the range, or at least testing the range. So, with that said, I think we're going to approach more bears sometime soon. Right? Sometime soon. Right? Let me back out again. Somebody's going to want to sell the bottom of this channel, don't you think? So bears are going to want to sell here, and bears are going to want to sell there. What would be perfect for both is for it to come up into the second one. And that's the trade plan we've had all week. Anyways, 81.50, right? What's up, Al? I can call you Wayne. Wayne, when you call me Al. Right? Anyways. Descending triangle and stuff. Yeah, you know what? I kind of ignore stuff like that. Very subjective. Especially, since I'm primarily, or not primarily, I base a lot of my analysis, or not even my analysis, my bias is based on fundamentals. I don't get over care. I love using technical analysis to enter trades, right? So I look for support and resistance. I have to have that. Support and resistance of price, support and resistance of market. And everything else beyond that is very subjective, nice to have, but not needed, right? So so when I see like yesterday we talked about Gartley patterns and, oh, that's a bullish bat pattern. Dude, I'm already in it. I don't care. Or, oh, well, this is a flag, or this is going to be a pennant, or this, it's funny, a lot of people use these patterns to sort of make their decisions. And I'm not saying that's you. I'm just saying just in general. I've already, at that point, by the time I'm looking at my charts, I've already made my decision, right? You know what I mean? So I don't need something like, oh, look, a triangle or something. Triangles can be very subjective and all that kind of stuff. But since I've already made my mind, by the time I open this chart, I'm like, I'm buying a dip. I don't like that. What more do I need? I don't need a triangle. I'm buying a dip. So I need to buy at support. You see what I mean? Where I filter everything else out. I'm not saying that the triangle or a pennant or a flag or all these things, I'm not saying they don't matter. What I'm saying is they mean a lot less to me than to other people, because by the time I open this chart, I already know what I want to buy. And then of course I only can buy at support. So I look at horizontal support, not, that kind of stuff. I don't know. I probably overplayed that. Bucky. Yeah, okay. Bucky says, hey, can we discuss that for a bit? Okay, sure. Support, resistance, price, and market. Let me find a different one. Let's do this. I don't trade like USD yen, and I got those on. So let's do USD yen. We'll just identify it for support and resistance of price and support and resistance of market. Now, the first way of doing this, let's do it hourly. First way of doing this, first of all, let's go old school. So I imagine many of you have read my book. No, it's not a shameless plug for my book. Okay, but this is what you would have seen in said book. Okay. So there's a couple of ways of doing this, and this is why I'm going in here. The first one is using these moving average combinations. I use the 2155. You know what? Maybe I can do a different template. Yeah, let's do it this way. All right, using these two moving averages, I measure the speed and direction of the market. The 21 doesn't cross the 55 very often, right? So I just use it as a definitional technique. I look at this and I say, well, technically, the market is bullish. I'm only looking at the market. What is the market? Medium time frame. And this, at this moment, over the last few days, the market's been bullish. Cool. Okay? Doesn't mean I'm buying, but it certainly means selling is going to be, as I say in the book, twice the risk, half the reward. Okay? But nonetheless, I need a definition. Am I a bull or a bear? In this case, I'll look at it. Market's bullish. Done. There's my great analysis. Okay? But that doesn't put me into a trade. So now I need something to define when do I pull the trigger? When do I buy? So I look at something else for that. But that's the market. This is price. Okay? So typically, I'm buying when price goes up in a rising market, right? So this is an opportunity to buy. Okay, this is an opportunity to buy. This is an opportunity to buy. This is an opportunity to buy. Okay? And of course, you can do this on any time frame you want. Okay? Buy, take profit, buy, take profit. For example. Okay? That's the basis of the book. The market puts you long. 5-8 cross moving up puts you in. 5-8 cross down takes you out. And you got to find the right time frame that you prefer. Spot trades, swing trades, all that kind of stuff, right? Okay, that's one way. I'm separating price. This is price. Price action up, price action down. Price action up, price action down. Ideally, price action, you want to buy in a rising market. Okay? A second way, going back to that other template I had, my standard one that I've been using for 15 years, I also differentiate market and price this way. Okay? First one is my MACD settings. I slow them down. I slow the MACD down. And MACD tells me whether the market is bullish or bearish. Okay? Okay? So that slows down And I can use this oscillator to look at, is the market currently moving up? Is the market currently moving down? Is the market currently bullish? Is the market currently bearish? Okay. And then using the stochastics oscillator, I speed it up. By slowing it down and speeding it up, I mean I change the settings. So in this case, price action is measured using the stochastic oscillator, right? Prices oversold, prices overbought, right? Oversold, overbought, oversold, overbought, oversold, overbought. Another way of looking at it is you could say like buy, sell, buy, sell, buy, sell. Now, if all you did was that, is it wouldn't work out. You wouldn't make money consistently. Now, the big question is, why would you not make money consistently if you're using these moving averages, or maybe you're using these oscillators to measure the market and price? There's one sort of thing missing, right? This is really good, and you could trade just on this, but it takes a lot of finesse, right? Right? It takes a lot of finesse where you need to know when things are changing. Like for example, trends don't last forever, right? So what clues are these moving averages, or what clues are these oscillators giving you to say, well, the trend is coming to an end. When should I back off of just blindly, mechanically buying or selling based on something like that? Right, and it's going to be support and resistance. Well, moving averages are support and resistance. They're dynamic, they're updating, and they're lagging. So there's another thing that we can be using. Okay, one thing that we can use, and let's go to a different template now. What would work fine? You know what? I'll just go here. Okay. Okay, cool. Another thing that we can do is we can look at what price has done in the past and use that as support and resistance. Okay. So an example of that is this used to be support, then now it's become resistance. Okay. Then this became resistance, that became support. Okay. This was resistance, or you can use this one, either way, it doesn't really matter. Okay. Now it's right. Higher high, look left. Higher high, look left. Okay. And what I'm doing is I'm using previous movements in price as levels of support and resistance. So imagine, if you will, you wanted to buy or sell, depending on whether you're a bull or a bear, and you used a combination of an oscillator. So like, for example, if you're in this circular area, let me add a circle or an ellipse. Okay, you might be in this spot here, and you're looking at your stochastic oscillator, and it's overbought. So a blind fool would just sell that because they're like, oh, look, the oscillator told me to sell. Whoa, 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 whoa. The oscillator isn't doing anything but measuring the current candle compared to the candles previous to it. That's all it's doing. It's not telling you to do anything. Okay? So when you use an overbought oscillator and you're at resistance, then price is much more likely to fall. Okay? Or if price is oversold and you're at support, it's much more likely to buy. So to begin everything, suddenly more important than the oscillators and more important than the moving averages is support and resistance. Because if you get a cross or of an oscillator or a cross of a moving average, they're sort of irrelevant unless they're preceded by a support and resistance touch. Okay? So you kind of have to start with price action first, which is now measuring price, right? Again, the question is, How do I differentiate between price action and market forces? Well, this is, excuse me, purely price action. You're looking at what happened in the past in price and predicting how it might, or using it to identify support and resistance, right? Is another way of saying it. Okay, great. Now there's also yet another way we can use, because that's just price. Another thing we can use is, this is probably too much, information overload. That's too much. Let's go to, here's a simple one. Pivot clusters, monthly. I guess we'll just do this one. Okay. This is pivot points. Pivot points look at, in this case, I put up monthly pivot points. Pivot points in the current period looks at the high, the low, and the close of the last period. These pivots were measured by looking at the high, the low, and the close, oops, over here, of the previous period, so on and so forth. And we're talking about a month worth of action here. So we're not necessarily measuring price like moving averages, right? What we're asking is, what was the market like last month? What was the market like the month before? What was the market? Was the market bullish? Was the market bearish? And it actually asks that question. See, it's not an average. A pivot point doesn't say, well, the high of last month, the low of last month, add them together and divide it by 2. That would give you the average. Okay? Like, for example, halfway between this and this can be measured very easily using a fib, right? So half would be here. So let me get rid of the pivot, right? Well, the central pivot point isn't actually there, or is it? That's kind of funny. It actually is there, so it just happened to be perfect. All right, bad example. But the formula is looking at the high, the low, and the close and divided by 3. The reason the close is important is it's trying to add market sentiment. Okay, market sentiment into the analysis. So if last month closed bullish, then the pivots are going, the central pivot's going to be more bullish than bearish. And then, of course, the other pivots are based on the central. So if it says, oh, well, last month ended bullish, even if it started bearish, it doesn't matter. It ended bullish. So the new pivots in our current time period are going to be much more bullish than otherwise. And same thing if the market was very bearish. Now, the reason this worked out exactly half is this is the USD yen, and they're supposed to be about the same based on how traders use them. So you kind of have to get a better example. So like this one, you see we started the month low and we ended the month really high. And you see how far up that central pivot point ended up moving, right? That's what it's telling us is, oh, the previous period was very, very bullish. And so it's helping you measure that. Okay. So anyways, this is measuring the market. It's helping me identify support and resistance of the market, where price action in of itself is measuring support and resistance of price, which is similar to how we're using moving averages and oscillators, helping us differentiate market, right? Market and price, right? So I'm using 4 different tools: price action, pivot points, right? MACD, stochastics, 2155, and 58 to all measure or to differentiate market forces from price action, or actually the other way, price action from market forces. So I'm doing all this. I look at the market. I'm looking at the 2155. I'm looking at pivot points, and I'm asking myself, am I a bull or am I a bear? Okay? You see what I mean? And then when I've decided if I'm a bull or a bear, I'm looking at opportunities. If I'm a bull, I'm saying, is this a good opportunity to buy now, or should I consider buying later? Well, that's where price matters. I already know I'm a bull. Done. I don't need to talk about the market anymore. Obviously, the market is bullish. I'm a bull. Great. So is now a good time to buy, or should I consider buying later? Well, where should a bull buy? Support. So that's what I'm using. So I'm looking at pivot points. Is this going to act as support? Will this be a good opportunity for me to buy? And, and that's going to give me a very specific price. Or I look at price action and I'll say, oh, right. Or, right. But nonetheless, that's how you separate them. And you're saying, if I'm a bull, I want to buy at support. I want to buy low, so on and so forth. Yeah. Oh yeah, Luisa, that pivot point I've been using. Yeah, this old pivot point setup I've been using well over 10 years. Well over 10. I'd say 13 years. Oops. "13 years I've been using that setup." Okay, I'll give you an example. Okay, this is a buy. That's how simple the indicator is. That's a buy. That's the best buy. That is the one you're hoping for the most. And by that box, I mean, let me even make it, okay? On the first of the month, if you were a bull, so back in here, you would say, if it dropped down to 110.42, I want to buy. That's how specific that is. If you know how to swing trade, you know that's your exact price, and your exact target is here, 112.79. That's your exact price. So, if you were me, would you be using this indicator? Yeah, it works fine. You'd keep that around for 13 years, right? You've probably had 3 wives in that amount of time. Right? All right. So that's that. Was that all right? That was too much? I think it was too much, right? If that was all right, do the old thumbs up thing, and then I'll move on. We'll burn through these, all right? I guess we'll just stay with the ends if that's okay. Yeah. Okay. So let's go here. Beast, we're riding off the 21. Remember, this opened off out of position. When you open out of position, use the 21 as an average. I thought that we would be hitting this area today or tomorrow. That's typically what happens when you're out of position. But, 21, see how we're above the 21? So the market's bullish, right? If I asked you, is the pound yen bullish or bearish? It's a definitional question. I don't care what your opinion is. I don't care what my opinion is. I asked you a very specific question. Is the pound yen bullish or bearish? Oh, it's bullish. No opinion needed, right? Once again, technical analysis is sort of like learning how to play piano by reading sheet music. You don't have your opinion on how Mozart would have played it, or how would Beethoven, feel. Dude, just sit there. It's Moonlight Sonata. Sit down, play it. It's very least. I mean, just play the notes. So, in this case, is the pound yen bullish or bearish? It's bullish. Well, how do you know that? 21's above the 55. Done. Right? So, you have to ask yourself, do you like selling in a bullish market? I mean, it happens. There are pullbacks, But I think if you looked at 1,000 years of trading pound yen, you're probably better off buying in a rising market than selling in a rising market. Okay? I learned that the hard way, by the way. If you were me trading currencies 15 years ago in the middle of the night with no charts and no experience, no idea about fundamentals, no idea of technicals, right? Yeah, you pay the penalty. So very early on, I'm like, wow, I need to find a clear way to decide whether this is going up or down. So anyways, 21 is above the 55, so I'm better off, what we talked about Friday and Monday was, buying the dip and taking it up into here, okay? And right now, it's not doing it as quickly as we would have liked. I would have liked to have been up here now, because then I would say, take your profit, and if you want to be a cheeky monkey, you can consider a counter trend. But we're supposed to be up here certainly by tomorrow, okay? Is it dropping below this 21? No, it's all good, right? Still bullish, okay? Okay, can you see how if you wanted to be a bull, you already knew that, right? You already knew you wanted to be a bull. You see how these 5-8 crosses can be helpful? Okay, like here's a great scalp, for example, right? Beautiful. So anyways, trading is so much easier if you've made a decision before you start looking at your charts. So anyways, CAD Yen, we had two thoughts. Bears were going to sell this rally kind of thing off the M3, right? And it looks like they actually did. Remember, we did this yesterday. Let's drive in there. Remember I drew this, said up into this line here and down? Looks like they actually did it. Pretty amazing. The bulls took it over, but not the way I would have liked, or at least not, let's see. Yeah. So, yeah, that one's tricky. Everybody did what they were supposed to do. Bears sold it hard. Bulls bought it back. Okay. All right. So, off it goes. It's amazing, right? Okay. So, like, now what? Your target is still the target. I think, well, first of all, the 55, the fact that we broke through the 21 on this 4 hour and came down to the 55 tells me that we're going to double top. Okay? So that's also a predictive move, right? So this is slowed down enough where I need to adjust, at least on the, the short term, meaning, the next day or two. Oops, let me get that out of the way. We're likely to get this. Okay, if I was a bear and sold it here, I probably made money. I certainly did lose money. I'm going to try again up there. Bulls are just praying, but the thing is, this tells us we're going to wimp out, and we're not going to be able to get above what is that, 87? I can't even see that. 86. Where are we? We're at 86 now. Oh, that's 86.50, right? So 86.50 is going to be a massive challenge for this market, according to technical analysis. Okay, a swing trader, a bullish swing trader. Okay, so what you would have planned out, let's say last week, right? Late last week, you would have planned out a bullish trade plan like this. Okay, that would have been your bullish swing that you would have done last week. Okay, pretty simple, right? There's nothing crazy about that kind of setup. It came down, so this zone that I identified, let me get this a little more precise. Okay, you can see the top of this is 85.40. So you would have certainly you would have certainly been ready around the 50 mark. It's a midpoint cycle level. It totally counts. Okay. And anyways, what this group is thinking is they want to ride it beyond that resistance that the 55 is predicting. They want to ride it up to the next one, which is 87, maybe even 87 and a half. Right? Bum, 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 bum. Kiwi. This is that plan again. It's just working out. Nothing dramatic. Again, this is the plan from Thursday of last week. On Thursday of last week, we had it coming down to this exact price. And then up. And yeah, it's just kind of doing its thing. Got a little ways to go. I got to back out to remind you where we are. Okay. Sometimes people come into the webinars and they're like, Wayne, your charts are really messy. It's really hard to read. Well, you should have been here when we did the analysis. Right? So if you stick with me for 3 or 4 days, after a while, you remember all these moves. We identified all these moves. So I used this move here to predict this move here. That's why it's there. Right? So then we identified this as a swing support, swing high, right? Swing low, roll reversal, and up. Okay? Plan B was a double bottom. Okay? And the cool thing about this is we talked about how bears wanted to sell this, and right, bears want to sell up here. It's a counter trend. And bulls want to buy it here. So bulls and bears agree it should fall. You guys remember talking about that? Or, oh, sorry, that would have been the swing trading group. So we talked about prices very likely to fall because both bulls and bears agree that it should fall. Not just should, that they want it to. Okay? Very similar here. It should go down so it can go up. Sort of like cars, right? Turn left to go right. You have to watch the cartoon. So anyways, a swing up, target, right? Counter trend down, roll reversal, long and gone. Okay. I don't know if you want to treat this as a crown. Some of you guys would say something like inverse head and shoulders and stuff. Yeah, not really. I think head and shoulders and stuff get overplayed, but I've thought that forever. I would just treat this as a 1, 2, 3. Okay. So all we talked about here is, look, in the previous week, we identified this price specifically as a buy zone. And if you bought it at that exact price, this was the exact target. I mean, perfect, right? Ridiculous, right? Absolutely ridiculously sickening perfect. So, right? But the next part is this high is higher than that high. That's all it is. Just like the other currency pair. This high is higher than that high. So what do? Well, after a higher high, you should expect a higher low. So that's all this is. Look left. Oh, there's support. Oh, there's the new pivot. There's the monthly pivot. Gone. Okay? See, I don't know if this is going to go up. Think of it mentally. Like, this is bullish. And whoever bought this was a bull. And you know bulls bought it because they bought it at the exact price and they took it to the exact target. People knew what they were doing. Completely logical. You can plan this days in advance. And we did, and it happened. Okay? So it's logical and controlled. So now we're up here. You know, how do you handle that? You buy the next dip. That's where technical analysis comes in. I'm not doing it, right? On Thursday, we would have known that having it drop into here is a buy. Plan A, plan B, right? I can give you the exact prices. Plan A, plan B. So if you're sitting here waiting on Monday morning and you're that close to the pivot, you might as well take a shot. Or put your order there, or do something anyways, right? So there's the Rand. Boop, boop. A moment of truth for South Africa, huh? We're right in here. If you want this to fall, it kind of has to stay below this line. Okay. So let's go do our typical around the world. Do some gold, do some oil. All right. Hey, don't forget to do a like. Let me know. Gives me feedback. I don't know if I'm losing you or not. Okay. Nothing's changed here, really. We're just moving up. So this goes back to yesterday's webinar. This was the buy zone. We're just in a channel. We're higher high, higher low, higher high, higher low, higher high, higher low. Notice how we're riding the 21, guys. Up, 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 down, down, buy at the 21. Up, 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 down, down, buy at the 21. Up, 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 down, down, buy at the 21. Up, 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 down, down. Wonder what's going to happen. Current target for this trade plan from yesterday still exists. We're trying to ride this 21 up into here. I don't know if it'll do it in a day or a week. See, if we do it today, it's going to come down harder than if we just slowly work our way up. Okay. See, like how we basically hit it on Tuesday and it collapsed, and then we slowly rode it up on Friday, you know. Okay. So that's beast, or not beast, pound dollar, and it's just doing its thing. Here's some gold. Yesterday we identified this as being a bottom, this as being a top, and this is something in between. And I said I was basically neutral on it for now. You know what it's done is it's doing two ranges now, okay? Which means it's tightening even more. So you might, you know, you could sell here and buy here, sell here, buy here, or you let it break up into here and sell here or buy down here. I'm going to put it like that. So the range is just tightening, which some people say, well, that's a bad thing because it's not going anywhere. But other people say it's a good thing because the longer it moves sideways, the bigger it's going to break out. But nah, I don't really buy into that. It's not going anywhere because nobody's buying it or selling it, right? So that's kind of where we are now in the context of reality, or of our reality. Nothing too exciting, right? You'll see how you're better off buying low or selling high. In the middle, I call that nomad's land. And you're going to get shot in the back, son. WTI. Do you guys trade oil? Does anyone here trade oil? Or do you just care about it fundamentally? What is it? Maybe you don't even care about oil. You're like, man, I don't trade oil. I just trade erythium or whatever it is. I only trade uranium. So anyways, we're consolidating here, but not working our way down. Right? It's all right. I thought it was going to go a little higher before it came down. It didn't do that. So I think it was John yesterday talking about it coming down, which is fine. I wanted to go up a little higher before it came down, so I'm a little disappointed in that. So we're just waiting. Okay. Yeah, Johnny's actively. That's cool. Okay. The best time to trade oil, in my opinion, is just before our webinars. The market opens early. Right? You want to be there, market opens. Why don't we kill this setup? I don't really care about this analysis anymore. Why don't we change the template? That one's not working anymore. Line by so slowly. These are all old setups. Oh, these work. Yeah, this is an interesting one. So I have it here. It's measuring yesterday's low, yesterday's high, the fibs on it, pivot, daily pivots. Right? So if this is yesterday's high and this is yesterday's low, some people would assume that they're going to be very interesting levels, right? You're either in a place to sell, or maybe you're going to treat it like a breakout. It's not what I wanted though, but it's interesting. I haven't used this one in a while. Maybe that's the one I was looking for. Okay, London Open, Asia. Not the prettiest colors in the world, but the grayish bluish areas are Asia. This I don't know, gold area is London. And then you can see we're working our way into New York. Someone said they don't trade oil because it's not a fast move. Some of my fondest memories, or how about my most memorable memories? Oh my God. Had to do when I traded oil on a regular basis. And back then, so let's say if you trade one standard contract, if it moves $1, you make $1,000, right? I used to make or lose $2 in the matter of like 5 seconds. So I remember doing things like out and then praying, and I could make or lose 2,000 in the 3 or 4 seconds that it would close. So, anyways, that was back in the day, long time ago. I just remember sweating bullets over my oil trades. It was super exciting. I like trading the open and I like trading the close. And specifically, the one I'm talking about was the close. Yeah. So if you trade oil now, yeah, doesn't do that anymore. But still. Let's see. So Lots of different little tools you can use. I don't know if you like these session type tools, but that's interesting, right? So you can see, like, you see this box here, this bluish grayish box. It's just the continuation of the gold box into the New York session, which is pink. So this grayish is actually just the gold box going into New York. So the gold box is the London session, right? This whole area. Let's do it this way now. That's even more confusing. Anyways. The overlap's not perfect, as you can see, but anyways, it's interesting, right? You think it's a coincidence that this took off right at that box? So anyways, lots of fun tools you can use, play around. Let's see, euro dollar. So the way I look at a lot of these things is these are all just trade plans that we did. Actually, I did them last week. Okay. Right? I hope you agree, like these pullbacks and stuff, these are old buy zones. I have the lines going up, you know, like you can see the arrow. These are all just stuff, the plans from last week. So this was the double bottom to rise it up, and that didn't work. If you remember, we planned it and then it broke out. But I was trying to teach you how to trade it like conservatively, assuming it's going to stay in the range. But it's going up. We never said down. But anyways, the plan we had on Friday and then again on Monday is to just ride this up, in particular off of this area here. This is a very standard operating procedure for me, especially on a Monday. Like, oh my gosh, for me, it's actually Sunday afternoon. Like, that's a ridiculously obvious long. And then we're just heading up. Okay, and by the way, when I say things like that, like, oh, it's ridiculous, I don't mean like if you didn't see it, you're ridiculous, or if you didn't trade it, no, I'm just saying it's a very, very basic, standard trade plan. There's nothing complicated about it, right? So if you're not sure how that is, you're like, wait, I don't know what you're talking about. Then you need to take the swing trading course at FX Bootcamp. And yes, it's a shameless plug, but it is information that you need to have. On Sunday morning, and I talked a lot about this last week, you know, on Sunday morning, you need to be at your charts, or not Sunday morning, sorry, Sunday afternoon, you need to be at your charts when the market opens up. New Zealand happens around 5 p.m. Eastern time. And you're right here, you just have to buy it. It's just swing trading. You're like, oh, look at that. That's the exact price you were hoping for. Right? And so I look at it on Monday and we're up here. I'm like, yeah, well, that's what it was supposed to do. Hopefully we can get through the M3 because that's where all the bears are going to sell. In this case, the bears didn't sell there. So now we're up above the M3. And, you know, well, we haven't had a breakout, but, you know, there's nothing really massively amazing going on right now. So, but this is all pretty predictable. And of course it can collapse at any time, but probably not. We're above the M3. So it probably will keep going, slowly eking its way up. It's going to be challenged here. But based on what we see so far, you know, a move like we're up into here now, and then the pullback is fine. Retest it, that's great. And then we should go up into here, and then you should take your profit. Right? And that's a nice little entry. It's just, that's it. That's a swing trade. Very, very standard, very, very straightforward. So now when it's Tuesday and we're consolidating up here, I'm like, well, it's not a great move. It's not a huge move. but it did set up properly and it did break out. So now we're going to get caught in here because technically we should. If I had entered here, I'd probably have my stop at break even, and I should let it run. And I don't feel good about the way it's behaving up here. But the way I look at it is I understand what market participants are thinking and trying to do. You know, I said yesterday that bears would be at this lower level, and I think bears are going to be at this upper level as well. But this is where they should have sold. Okay, the fact that they didn't sell this lower one, this is the one I'm talking about here. The fact that they didn't sell this one makes me think that there's not enough. Okay, this is definitely a double top threat, so that concerns me. So what I'm thinking right now is it should just consolidate for a while and then break out to the upside, and then we'll be done. And that's what we talked about on Monday, or even Friday. Okay. Okay. And hopefully you understand that. If you don't, ask questions or take the course. Price looks overbought. Yeah, well, for now, right? So on this time frame, it does. But it's because we have all these challenges right in here, right? If we get above this, right? If we get to this target that I have, it's going to be very interesting. Okay. And by the way, this monthly swing we set up 2 weeks ago. 2 weeks ago we set this up. Remember when we're up here, we had it coming down and then we were going to buy it. I had two arrows. There was plan A and plan B. Plan A was this one. We're supposed to be on our way to 119. You guys remember talking about that? Well, the entry was 115 or 115.50. Okay. Certainly, let's say 116. Working our way up, man. Working our way up. Okay, but it's slow. It's slow, it's vulnerable, all that kind of stuff. This is that dangerous one. Swissy's been crushing the Aussie, right? Killer. So that we're on a daily chart here. First of all, what's your opinion? Is the market bullish or bearish? And you say, well, I don't really have an opinion on this one. The market is bearish. You say, oh, great. So now your opinion comes down to, or do you want to be a buyer or do you want to be a seller? Okay. And you put down your trade plans. Okay. The interesting thing is bulls were supposed to buy it here. That's why I have this. If you were a bull, trace it down, drop it up. If you're a bear, your sell zone is here. Oops. So bears are waiting for the false rally to sell. How should I do this? I got it all backwards. Anyways, forget it. Right. How should I draw this? Okay. So you got to pick your lines, decide what you are, and it's pretty clear at some point places to buy, places to sell. So it seems like maybe consolidation for a while, even though this has been down for so long. Another way of looking at it is when you're up high in resistance and you're a bear, you need to look to sell. Okay? When you're down low and you're a bull, you need to look to buy. Everything in the middle is kind of just mediocrity at best, right? All right, hey, everyone new, make sure you subscribe to the channel so tomorrow or the next day when I do the live webinar, you're notified and invited. Okay? To do that, you just go to the little Forex.Today thing in the middle. Hang on, right here, and you just click subscribe. Bottom right-hand corner of the video. Can't do it because it's choking on my, there we go. Be really nice to see you. Okay. Anything else today? How can Uncle Wayne help? Oops, I just lost the chat. Hang on. Nice. Guess I got to go over here. Anything else that Uncle Wayne can help with? Another great trading day. Another great opportunity to be live, be an awesome currency trader. Cool. Well, you know, I really enjoy our time together every day. I look forward to it. I thank you for everything, you know, all the effort that you put into trading every single day. I hope the pieces are coming together. I highly recommend you take very specific things and practice on very specific things. Remind yourself every day, trading a lot will not make you a better trader. Practicing with intent will make you a better trader. So what is it specifically you're working on today, right now, to improve? You can't improve on everything all at once. Okay? What's the one thing, right? What's the one thing? And you should have it written down. You should have a plan on how you're going to improve and track and all that kind of stuff. Maybe it's simply pulling the trigger at support and resistance, right? Maybe it's practice analyzing your charts. You're like, you know what? I've been lazy on the 2155 analysis or something like that. Or I need to get pivot points into my analysis a little more. Or market opens. Are you trading when there's volatility? Very often I find traders that are going through a rough period. I look at their trading, and they're trading like, they're putting their trades in like the strangest times of day. I'm like, why are you trading, after New York but before Asia? They're like, that's when I get home from work, and that's the only time. Yeah, well, that's a terrible time to trade, right? So I don't know. Pick something very specifically and work on it, right? Long positions for me, yeah. Anthony Anderson says, but how do I join your group? What do you mean my group? So right now, I do these webinars every single day for free, right? I ask you in return to visit tradersway.com and open up a trading account. That's all I ask for, right? So anyways, guys, peace on earth. May the pips be with, let's do it this way. Oh, there we go. Peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow. Take care, guys. Thanks for being on my team.